Welcome to today's Explainer. Look, if you've ever felt like your finance department is just constantly drowning in a sea of paperwork, well, you're in exactly the right place. Today, we're tackling a massive challenge that businesses face every single month, that dreaded accounts payable paper chase. We're going to explore how integrating a smart purchase invoice app with your accounting system can automatically recognize and record those pesky recurring invoices. We're literally going to see how smart automation is finally defeating the monster of manual paperwork once and for all, and, hopefully saving your sanity in the process.
Okay, let's dive into this. Here is our roadmap for getting from manual bottlenecks to a touchless financial future. We'll start with the manual invoice problem, then look at how invoice automation works, explore AI and smart matching, unpack accounting integration, and finally, take a look at the future of finance.
Starting with Section 1, the manual invoice problem and its pain points.
Let's set the stage here by looking at the true hero of our story. You, the totally overwhelmed accounts payable clerk at month end. Just picture it. Your inbox is just absolutely flooded with recurring invoices. We're talking office rent, cloud hosting, software licenses, utilities, the whole shebang. The traditional process? You're downloading PDFs, manually typing details into the system, taking wild guesses at the right general ledger or GL accounts based on what you did last month, and chasing down managers for approvals who act like they've never even seen an invoice before. And finally, you manually post the entries. These cascading pain points mean a simple typo can result in duplicate payments or incorrect GL coding, and that causes massive delays in your month-end close. It's slow, it's costly, and honestly, it's just an incredibly stressful cycle.
And this brilliantly illustrates the contrast here. On the left, manual processing. It's a labor-intensive slugfest that basically breaks down the minute a company starts to grow. But on the right, we have automated integration. It's touchless, it's lightning fast, incredibly accurate, and highly scalable. It doesn't matter if you have 10 invoices a month or 10,000. It just works.
Let's move to Section 2, Invoice Automation, and how it actually works.
So you might be wondering, what is the magic weapon that transforms that grueling manual process into a touchless, automated dream? Well, the foundation is OCR, or Optical Character Recognition. Because think about it, before a computer can make smart decisions about an invoice, it has to actually be able to read it. OCR is the technology that scans a PDF or an image and pulls out specific data points like the supplier's name, the invoice number, the due date, and the line items. You can kind of think of OCR as the eyes of our automated system. It captures all that raw data so the AI brain can take over.
Let's track a real-world micro-narrative here. Imagine a reoccurring cloud hosting invoice. Step 1, your supplier emails it to a dedicated inbox. Step 2, the application automatically imports that PDF. Step 3, our OCR eyes extract the data. Step 4, the AI kicks in and suggests the correct GL account based on your history. And Step 5, because the amount is perfectly normal, the system auto-approves it and creates the journal entry via an API. Boom! From the moment the email hits the inbox to the moment the ledger's updated, it takes under 1 minute. And a human being didn't have to type a single keystroke. No way, right? But it's true.
All right, Section 3, AI and smart matching, and how it makes intelligent decisions. Now that we know how the system reads, how does it actually think? What's really interesting about this slide is seeing how incredibly resilient the AI actually is. I mean, suppliers change their invoice layouts all the time. If the system only looked for the name ABC Office Supplies in the top left corner, it would completely break the moment they updated their logo. But the AI identifies suppliers using a whole matrix of clues. It looks at the tax ID number, the bank routing info, historical layouts, the physical address, and even the email domain it came from. This multi-layered approach means the recognition accuracy is just absolutely crucial, and it works no matter how much the formatting gets shifted around.
And when it comes to validating the purchase, the system uses something called three-way matching. Let's demystify this for a second. For procurement-related purchases, the system automatically checks 3 distinct documents. 1, did we order this? That's the purchase order. 2, did we actually receive it? That's the goods receipt note. And 3, does the supplier invoice match those first 2? If the PO, the GRN, and the invoice all align perfectly within predefined tolerances, the system just approves it instantly. But what if an invoice actually needs human eyes on it? Well, the system knows exactly who needs to approve what. It uses smart workflow rules based on predefined thresholds. For example, say an invoice is under $1,000. That might just get routed to the department manager. If it's between $1,000 and $10,000, it bumps up to the finance manager. And if it's over $10,000, the system automatically knows to route that straight to the CFO. Exceptions and high-value invoices go to the right managers immediately, while standard recurring bills just flow right on through.
This brings us to Section 4, Accounting Integrations, or how we get that seamless sync.
Okay, so we've read the invoice, we've identified the supplier, coded it, and approved it. But how do a specialized invoice app and a massive accounting system actually talk to each other seamlessly without anyone having to type a single number?
The answer lies in API data mapping, which is often handled through a REST API. You can kind of think of this as a real-time translator. The Invoice app might call the company that sold you paper a supplier, but your specific accounting software insists on calling it a vendor. The Invoice app uses the term GL account, but your system wants expense account. The API integration layer perfectly aligns and maps these fields between two entirely different software systems, making sure absolutely nothing gets lost in translation.
So the crucial point is that this integration relies on structured code, like this JSON payload here. This simple, organized block of text contains all the vital information: the supplier, the invoice number, the exact date, the currency, the tax amounts. The Invoice app packages this payload up and securely hands it over to the accounting system in the blink of an eye. This structured code completely replaces the need for an AP clerk to sit at a keyboard and manually retype every single digit.
And here is the incredibly satisfying conclusion to our automated journey, the final journal entry. Our API payload has successfully triggered the accounting system to post perfectly balanced debits and credits. We have a debit to the office supplies expense for $2,205, a debit for the VAT at $245, and a corresponding credit to accounts payable for the total $2,450. No typos, no misplaced decimals, just perfect automated accounting. It's a beautiful thing.
Let's move to our final section, the future of finance and tomorrow's AP teams.
Let's see how this builds a highly scalable, secure foundation for the future. Now, a really common fear is that automation means losing control. But honestly, it's the exact opposite. These systems are totally locked down with HTTPS encryption, OAuth 2.0, and role-based access control. Automation actually strengthens our audit trails. The system is constantly hunting for duplicate invoices. It will immediately halt and request a human review if a PO is missing, or, if a scanned document is just too blurry for the OCR to read confidently. It catches the errors before they are ever paid.
And guys, the technology is only getting smarter. The AP landscape is rapidly evolving into a highly strategic function. We're seeing generative AI assistants built directly into AP platforms. We have predictive anomaly detection that spots fraudulent invoices before they even process. These systems are continuously learning, improving their GL coding accuracy with every single transaction, all while synchronizing with your ERP in real time. They can even suggest the most cash flow efficient days to intelligently schedule your payments.
And this leads us to a massive, game-changing number, 80%. By adopting these automated technologies, organizations can achieve a touchless processing rate of 80% or more for their recurring invoices. Think about that. That is 80% of routine bills flowing from a supplier's email directly into your financial ledger without a single human touch. That represents an absolutely staggering savings in both processing costs and time.
Which leaves us with this final, vital question. As manual data entry basically vanishes from your day-to-day operations, how will your finance team use their newly found time to drive strategic, big-picture business decisions? It's a totally exciting paradigm shift, moving accounting teams away from the keyboard and right into the boardroom. Thank you so much for joining me for this explainer. I really hope it brought some clarity to the incredible power of invoice automation. Keep learning, and I'll see you next time.